Hi, I'm Sean Savage with International Risk Resources, and welcome to another installment on our video series about self-insured retentions. In this video, we're going to cover the benefits of an SIR, or what is the benefit of a self-insured retention to both the insured and the insurance company. So we're going to cover both sides. If you haven't seen our other videos in this series, I'll link to them below, so check them out when you can. Our goal with these videos is to keep them simple and brief. So let's just get started. So a self-insured retention offers two main benefits to the insurance company. The first and the largest one is by cutting internal costs. See, your premium is made up of two main components. One of them is what the insurance company thinks they'll pay out in claims for your type of risk and your particular risk within that type. And the second part of it is the internal costs associated with issuing the policy, with paying the underwriters and paying the claim staff and so forth. So by selling a self-insured retention policy instead of a deductible, the insurance company doesn't have to allocate the expenses of working claims for your particular account to that claims department. The second benefit is it improves the insurance company's competitive position on your particular account. If the insurance company can cut the internal costs, they can share a little bit of premium savings onto you as the insured. So your premium will be a little bit lower, which improves their competitive position and gives them a better chance of getting the account. Now there's another benefit as well, and that is that with a self-insured retention, the insured is taking ownership of those claims in the beginning. And historical data shows that you get a little better performance out of a particular account, both for the insured and the insurance company, when the insured takes ownership of those claims. He just gets a little more aggressive on them. Now let's take a look at the benefits for the insured. Number one has to be lower premiums, right? I mean, most of the time you'll find that a self-insured retention general liability policy has a lower premium, costs less money, than a deductible counterpart policy. And the second reason is the insured has a lot more control. See, most self-insured retention claims don't ever go to the insurance company. The insurance company doesn't see them. They're not reportable to the insurance company because they're handled within your self-insured retention. This means the insured can use whatever attorney, whatever experts, investigators, and so forth that might be necessary to resolve the claim. They can use anyone they want. They can also settle the claim or deny a claim. You can decide to do a deeper investigation into a claim. You're totally controlling your own claims through your third-party administrator. You don't have to know exactly how to do all this stuff. You can just say, I don't like the way this is going, or let's change our course of action here, and you're free to do it. Your third-party administrator will help you with that. Another benefit is, do I report this claim? Many companies hesitate to report claims because they're afraid their premium will go up. But see, with a self-insured retention, you call your third-party administrator and you say, hey, here's the claim or here's the situation. What do you think I should do with this? And there is no record of it. You're just having a conversation with your advocate, your subcontractor, who's specializes in claims management. So they'll just tell you, in this case, I would do this, or why don't we try to do this first, or let us write a letter, or whatever the case might be, to try to simplify that process and not make a permanent record of it. Another benefit is transfer of risk. That might sound technical, but basically all it means is you transfer the risk to the person who's responsible. So many businesses get lawsuits or threat letters or claims submitted on work or accidents that they had nothing to do with. And this gives you an opportunity to have another specialist in your third-party administrator. You sit down, you have a quick conversation about how do we best handle this? How do we get out of this claim? And you can do that with a self-insured retention. And probably the next best benefit is the risk management services that are available to you. See, when an insurance company is handling your claim, they just handle your claim. They don't offer any advice or suggestions of how you could have mitigated that claim to begin with or warded it off entirely. When you're on a self-insured retention, you have an advocate on your side that says, we can cut these down. We can install this language in your contracts, or take this precaution to prevent accidents and so forth. Somebody who can help you reduce claims to begin with. Well, I hope that was helpful in describing some of the benefits of a self-insured retention. We didn't want to get too technical, and I hope we didn't do that, but that we still provided real benefits that you can see. Please be sure to check out our next video in the series called How Does a Self-Insured Retention Work? But until then, I'm Sean Savage with International Risk Resources. We thank you very much for watching and look forward to seeing you in the next video. Thanks.